walkthroughs. So a couple of walkthroughs of the systems that we have, the new ones, and we're going to have a quick look at our top 10 or what systems are tracking really well at the moment. And then we're going to just have a look at also some of the optimizations as well that we can do with our new systems that we haven't previously been able to do because they haven't been included in our other strategies. So quite a bit to go through, so I'll jump straight in. What I want to start with is the pin bar reversal. So as you will have known, we've been doing a little bit of work on the pin bar reversal for TradeStation. We've spent a bit of time, I guess, getting to a point where it's pretty much finished. There might be a couple of additional filters that we'll put in, mainly to do around stops. So what I'm wanting to do for us as a group is to make sure that we have everything we need in the pin bar reversal without going overboard and putting too much in there. But I think you'll find the way we've structured it, it actually is going to be a bit better to use and a bit easier to use. So that was always my kind of goal with all these strategies. So what we're going to find is that, I'm going to just take you through it now, the actual strategy itself, and I'll just move that, that's our just our settings. I'm just going to go through and grab the strategy. Now, the pin bar is it's a fairly simple strategy to use and to look for. You're looking for basically a pin bar is a bar that sets up with a very small body. So with our strategy, you're actually dictating how big your pin bar is and what percentage of the pin bar you're looking for. For example, I'll explain this a bit better. When we look at a pin bar, what we want to see is we want to see a bar that has a very, very long wick and a very small body. And I'll give you an example of a couple here, and then we'll add in the paint bar. So for us specifically, that could be considered a pin bar. There we've got a long body or wick, and then we have a small body. Another example would be, and ideally, the ideal situation is the pin bar is actually less than 30%. The bar is actually less than 30%, or the body is less than 30% of the actual bar itself. So that's really the ideal scenario, less than 30%. And you'll find that on these higher time frames, 5 minutes not a higher time frame, but on the higher time frames, you'll see a lot of the pin bars set up, and they have that situation where they've got a very small body and a very long wick, and that's what we're looking for. And in the strategy, if we go into the strategy, the first thing that we look at in our strategy, go to pin bar, is we've got the minimum body. So the minimum body is what you're electing when you're doing your testing. You're saying, all right, you're basically determining what the percentage of the body's going to be in relation to the wick. So the calculation for this, if you go into the strategy, the calculation is the distance between the open and the close. So the maximum value here would be 100%, and the actual pin bar should be 30% or less. So if you're gonna set as a minimum body, it would be 0 to 30%. So this should be considered this is a percentage value. So that's what we're looking for, 0 to 30%. Now, I'll just cancel that for a second. So that's the first thing with our strategy. And the reason why I'm going to walk through this specifically is because I'm going to load this a couple of these systems that I've been optimizing into Dropbox, so you guys can actually do some optimization yourself. And a good starting point obviously will be making sure that that you've got access to. I'll just move that over for a second. Making sure you've got access to strategies that have the actual system strategy and also the GMT exits, because what you'll find if we go into the pin bar strategy, you'll find that the way we've structured the pin bar up is you've got, if you've had a look, you've actually got a pin bar stop loss, so we set that to true. And what that means is that the pin bar itself, the stop for the pin bar is the high or low of the wick. So if you're taking a short entry, then it'll be the high. If you're taking a long entry, then it'll be the low of that wick. So that's where we're at with our pin bar. Now, is that the only stop we can use? No, it's not. We've got access to multiple stops. So if I set this to true, it's automatically going to, and let's do it, it's automatically going to use the pin bar stop. And I'll do a visual representation of that. I'm going to turn my GMT stops off and pretend that we're not using that. Well, not pretend, but we aren't using that now. So this is solely going to use the GMT pin bar stop. So I'm going to try and grab a bit better look at the pin bar here. I'll get something that has potentially a cluster of price action around the pin bar that has gone in the wrong direction. Because there's a couple of examples here where the pin bars worked really well. And we'll go insert analysis technique, and we'll go into our paint bar, and we should have the GMT V2 pin bar. Okay, let's just let me get rid of that. That's not what I wanted. So I'll just cancel out of there. That's our trend. Turn that off. Sorry about that, guys. We go to insert analysis technique. We've got a few in here. So we want the pin bar, and I'm just thinking it's the show me. Or have I got it loaded? I might not have it loaded in here. I should. I thought I did, but let's just double check. Maybe I don't. There it is there, pin bar. Okay, we'll use the 19th of June. So we'll go with that one. Now let's grab an example of a pin bar here, and I'll have to set the settings up shortly. But let's do an example of a pin bar that doesn't work too well, and here's a good example here, or a reasonable example. Now the pin bar here, the body is you've got your body and you've got your wick. Now where is the stop in the strategy? Where's the stop going to be for this pin bar? If I set that to true, my stop loss is going to be the top of that wick, isn't it? So if I go to the top of that wick, that's where my stop's going to play out. So just here, it's going to actually be a point. It's set, the strategy set to a default of a point above, so we're not actually on the top of the wick, but that's where my stop is. So we'll just add that as red, and we might give that a little bit of style. So there's my stop. Now what we've built in, as I said before, is once you trigger into this trade, and we've been through this before, but I'll just walk you through it again. You've got what are our two options to get into the trade? If we go to our strategy, what are our two options? Our options are to do a pin bar break or a pin bar retracement. So you wouldn't necessarily, you're not going to be picking both of those. You're not going to have those both set to true. So you're going to either have one set or the other. And if you're going to do a break, you're breaking the low. Which is basically going into the trade on a break of the low of the body. If you're, for a short setup, that is. If you're taking a 50% retracement, we need price to retrace 50% of the entire pin bar to get into the trade. So it has to move at least 50%, and then we're into the trade. What advantage do you think the 50% retracement has over just the general break of the low of the candle, or the body, or the high of the body, depending on whether you're long or short? Would there be an advantage to that, or do you think that it depends on, obviously, the market and the conditions, etc. But what's the potential advantage to having a retracement entry? More pip potential, yeah. What else? So we've got more, potentially can take in more dollars, but remember the whole concept of the strategy, and every strategy we're trading is risk and reward, isn't it? So when we look at our risk versus reward, what are we ideally looking to achieve? And this is something you would have gone through in your training material. You're trying to, with all the strategies, you're trying to, when you're developing your systems or doing your testing or doing your system development, you're always trying to get a certain amount of dollars per risk that you're putting on the line. So we call it our R multiple. Most of us are talking in multiples of risk. So, for example, if we had a 20 point or 20 pip stop, then ideally, so if we were risking 20 pips, then as a round number, so 20 pips on the table, that would be our a negative 1R would be negative 20 pips. So what would we ideally want to be taking as profit, so a positive R, if we're looking at multiples of risk and reward in relation to our R multiple or our risk multiple, which is 20 pips, how many pips do we want to take as profit as a minimum? And how does the retracement strategy or entry help us achieve that? So the first question is, what balance are we looking for between risk and reward? Which entry is going to be more favourable to our risk versus reward, and which one are we? Yeah, so we're looking for at least 40 pips. That's right, Jason. So it's a positive 2R, isn't it? So negative. So we'll just put this on the screen. Negative 1R is going to equal 20 pips. So we ideally want positive 2R. So plus 2R, which is equal to 40 pips. That's really our goal, isn't it? For every strategy we're trading, we want to have that as a benchmark. We're trying to get, when you're doing your testing, your optimization, and you're looking at your strategies, and you're looking at your trade summary or your summary, and you're looking at what's your average trade net profit? Well, how much is my winning trade, 730, and how much is my losing trade? So here I've got 5.1, so 5 to 1. My ratio of winners to losers is 5 to 1, 5 to 4, sorry, 5.4. So when I'm looking at my strategy, I might have not a great win rate. It's a fairly poor win rate, 33%, but I'm actually getting a great reward to risk, aren't I? I'm getting a sensational reward to risk because my average winner is 5 times almost six times my losing trade. So that's exactly what I want. I want that balance or that imbalance between risk and reward to my advantage, obviously. So anytime I'm setting up this scenario where I'm taking entry, I've got in my strategy when I'm doing my testing, I'm going to be looking at, all right, well, what's going to give me my best reward to risk? What entry am I going to take? And I'm going to optimize on these, and I'm going to test on these, because really what I'm looking to do, I can't really over optimize on the break and the retracement. They're just a basic function of price action. Price either goes in your direction or it doesn't, and by optimizing the strategy or by testing the strategy, you're actually deciding or you're actually validating whether it's better on a pin bar reversal based on the scenario or based on the inputs that you've selected, whether it's better to take the pin bar break or the pin bar retracement. So it's a great little, when we talk about the Pro Trader program, we talk about that objective assessment. I think it's in module 2 or 3 that I get you to do with the objective assessment when we're testing. It's really good to validate your concepts in the strategy and really start to work out what is going to give you the best edge, because we're trying to push ourselves towards that better edge of that higher risk, low reward. Higher reward, low risk. I'll say that again, and that's what we're trying to do with our retracement. So it's there. I would definitely do a fair bit of testing on that, and as we go through this strategy, we're going to talk about little things in the strategy that make a massive difference. So those two I would definitely be spending a bit of time testing. The stop loss, again, I'll come back to that because I kind of got a little bit sidetracked on that one. The stop loss is, well, not sidetracked, it was a good segue. But if we have a look at the stop loss here, if I have my retracement entry, my 50% retracement entry, by taking that trade, my average losing trade is going to be less, isn't it? Because I'm actually, instead of getting in, say at the low of this body, I'm actually getting in halfway up the wick, and the distance between where I'm entering and where I'm getting stopped out is going to be significantly less. So that's definitely an advantage because I'm taking less risk. But one thing that we have with the pin bar strategy, and this is where it comes back to risk and reward, is that with a pin bar, we don't have a fixed R value, do we? I mean, we're talking about 20 pips at the moment as just a random number, but every one of these pin bars is slightly different in its formation and setup. So that means that we have a fluctuating stop value. Now, I don't know about you, but I prefer to have a fixed stop, or at least a fixed value that I'm prepared to play with. So what I've done is I've asked Mike to separate the strategy. So we've got the pin bar. We actually have, this is mainly the entries, the pin bar entry and the setup as we go through this tonight. But in the GMT exits, we actually have the function and ability to add this GMT exits file. So what I want you to do moving forward is I want you to use GMT exits v2mh. And now I sent that out with the email, the previous email. I'll send it out again this week or tomorrow or over the weekend as a reminder, because I'll be sending out an updated version of the GMT new systems. So what I want you to do is I want you to make sure, and if you don't have a copy of that, let me know and I'll get you a copy of it. I want you to have the GMT exits VHMH, so V2MH, sorry, because that's the one we're going to use going forward. So everybody should be using that exit strategy. That makes it nice and simple. There's no date to it. This is it. This is the strategy. It'll be the most current one. Anytime we update it, it'll basically just override what you've already got. And anything that we override won't change the settings or anything. It'll just be something additional that we add to it. So one of the things this allows you to do is it allows you to build in your stops. And this is a great feature because with the pin bar, we've got our pin bar stop, which is the high or low of the wick. But one of the things that we've always had in our stops is our initial stop. That allows us to dictate terms in relation to having a safety stop, and also it allows us to determine, all right, well, okay, I'm going to take these trades, but I always want to know what my fixed risk is. So we've got traders in the group who like to know what their actual risk is before they get into the trade. They can plan, they can test, they can build their portfolio based on a fixed risk amount. So while there is an advantage to having a dynamic or a volatility type stop, and you're going to find that the pin bar entry based on the pin bar stop, that's really a volatility stop, isn't it? Because what's driving the setup for your stop is volatility, how big the pin bar is, how big the wick is, how small the body is. All of that stuff is derived from price action. So this helps us to kind of get a little bit more control back, but you may find that, and this is where the testing is critical, we've got to do our objective assessment, don't we? We have to do that testing. So what I would suggest you do when you do your testing is break it up, do one test on your, say, your pin bar stop, and do that. That's going to be a varying amount. So if I turn that test on now, I'm going to have multiple different types of stops, values, aren't I? But if I turn that to false, which I'll do now, so I'll say false, and that basically takes out the stop loss.
So if I go and if I turn the GMT exits off, I'll show you what happens. Let's have a quick look and see what happens here. Basically, if I turn that to false and the GMT exits off, I don't have a stop. So this is going to go trade to trade here. Now, so what I want to do is I want to do a little bit of testing on my GMT exits, and remember we've got a multitude of exits we can go through with our GMT exits. We've got the basic initial stop, which we all have as part of our strategy. That's our safety stop. You might set it as 30 pips or 40 pips or whatever that value is. Then you've got your, and we'll just have a quick look at this. So there we go. Let's have a look at our risk here. It's not too bad. It's one of the stops must be in play, because if we had everything turned off, so all stops turned off, then this value here would be about $7,000 or $8,000, because it's just taking trade after trade after trade. So it's almost like running a mean reversion strategy where you're open risk, open risk, open risk until you eventually close out and take a profit or a loss. But it will show some very large max drawdowns. So that's not too bad. So in our strategy within the GMT exits, we must have, oh no we don't, but you'll find that when you turn this on, obviously you're capping your risk. So the advantage to that is you know what your risk is. The disadvantage is that you might have your stop slightly smaller than you would normally have it, or you might find that with the increased volatility you're getting taken out on the stops. So you've got to be a little bit careful about that when you're setting up your trades. But again, it comes back to your testing. Like, this is the great thing. You can, once you know what your entry is, and your entry is fairly simple, isn't it? It's a pin bar reversal. So once you get your entry and what you want to see set up on your entry, whether it's a rejection at a key level, whether it's a rejection at the pivot points, a rejection or a MACD divergence to get you into the trade, then all it is is working out, all right, well, how am I taking profit on these trades? And that's why it's really good to use the GMT exits, because you've got multiple options for taking profits. You've got your VM stop, which is a dynamic stop. You have your pivots. You have your VM targets, so your volatility type targets. You can set those. You have your fixed profit and your profit at key levels. So if I add in the key level filter here, for example, and I start getting close to a key level, I can lock in a profit based on these inputs here. So I would be very systematic in when I do my testing. I would basically go through and look at, all right, well, go through your minimum body, your wick multiplier, and I'll just quickly run through those now anyway. The wick multiplier means the tail is equal to or greater than three times bigger than the body. So it's basically just determining how big your body is to your tail. So you're selecting that, and the most correct and accurate is always 3 times or less, so you want that. The actual pin bar tail percentage, that's again going to be a percentage of your the pin bar is the pin bar tail as a percentage based against your actual body of your bar. So if you, for example, want this pin bar to be very, very the tail length to be significant, then you're going to push that up to the 85, 90 or even more, and you're wanting to have a very small body to show that decisive price action. The Balin, that's the number of bars the tail of the pin protrudes. So that's the number of the bar the tail of the pin protrudes through. It means that the lower of the pin bar is the lowest when compared to the last X number of bars. So if I look at the pin bar, and we'll just cancel out that for a second, then this bar needs to be lower than or higher than, depending on whether you're long or short, or what type of pin bar setting up. It needs to be higher than X number of bars back. So you might decide that, well, I need it to be higher than, say, at least 10 bars back. So you're trying to find a point in the market where you're getting that, you're getting kind of price move to somewhere where it hasn't seen support and resistance before. Or alternatively, you might not be worried about that, and you might decide, well, actually the whole idea of this pin bar reversal is I want to see the pin bar trading around support resistance so I can take the entry based on a rejection of, say, support or resistance. So that's really, it comes down to how you're wanting the pin bar to set up. So let's go back into our strategy. Now remember that these things are values that you're going to be optimizing and just working out what's going to work best for you as a trader. Again, the other things, now as we move away from this top section, we've spoken about the stop loss, the pin bar break or retracement, the two types of entries. This the moving average filter, probably not a significant thing with our pin bar reversal, but the one thing that is very significant, and I think John and Fergal will agree to this one as well, is this minimum price move. This is critical to your strategy. You'll find that your performance will increase significantly if you spend a bit of time on the minimum price move. Now, what I was angling at here with this minimum price move is that I wanted to see this pin bar set up based on a significant price move. Like, I want to see a good move before the pin bar setups. So the way I've set it up is that I've gone to, say, insert analysis technique. I want the show me function, pivot high and low. That's calculating the distance between. So I wanted a figure that I could easily calculate, that could easily be coded up. So the difference between my high and low or my pivot high and pivot low. Now, if I'm using this as a guide, I have got a very small distance here between the pivot high, pivot low. But remember, what do we know about the pivots, the basic? They're set at 3 and 3, aren't they? What should I have these pivots if I'm looking to extrapolate a significant move in the market before I take a pin bar reversal? What should these pivots be set at? Now, a lot of the testing we've been doing has been showing that, as I said, the minimum price move is showing some really good results. Anybody want to throw out a number here that we should be testing or could be testing, or what do you think should be the number that we should look at? Let's go 5. That's a good suggestion. I would say that you want at least probably 5, but you don't want to go greater than, say, 20, because the higher you set these pivots, the harder it is to get them, or the harder it is for you to get the pivot setting up correctly in real time. So that gives us a much better look, doesn't it? It actually sets us up with a minimum price move of over 50 pips. That's where, or 511. That's where I'm basically looking to get some decent move. So, sorry, 50. So I need to get a reasonable move on my trade for a reasonable price action before I start looking to take a trade, because I don't want to be taking pin bar reversals in congestion or where the market has not moved at all hardly. So I'm looking for a good move. I'm looking for some volatility, possibly a volume spike somewhere where someone's committed, whether it's the buyers or sellers, have committed to the market, they've overcommitted, and we've potentially got a key point, a key turning point in the market, or a key pivot point where I've potentially got an option for a trade entry with good reward to risk, and I can achieve my 2 to 1, 3 to 1, 4 to 1 or better, and I've got plenty of movement in the market so that that expansion has occurred, and then I could potentially fall back on that if it's a short, or improve on that if it's a long. So that minimum price move is critical to your testing. I would definitely be jumping into that and doing a fair bit of testing on the minimum price move. The other things that you want to consider, now there you that's your pivot count. Obviously, how many pivots? I would set that at 2. Turn it on and set it to 2 would be what I'd be looking at, a pivot count, or even 1. You could go, the key level is one that would definitely be something that I'd be testing on. Key level is your whole numbers, and that's X numbers before and after you've got to the key level. So you're looking at potentially taking trades at rejection points or points of congestion. So you've got your key level distance and then your key level entry. The higher time frame MA doesn't really, or I wouldn't think that you would probably get too much out of that. But the weekly pivot, yes, I would definitely set that as a rejection, and then use the session or date change. It's up to you, and then you can start your start time, end time. We spoke about this last week with the Asian session. So you might decide, well, I'm going to do my testing on the Aussie US dollar or the Aussie yen. I want to set it up for New York exchange time, and I'm going to kick things off at around about, say, 1800, and then close the session out at 2 a.m. in the morning. That would be your Asian session potentially, and then your weekly pivots would align with that. So the other things that we have are the momentum filter. I wouldn't necessarily think that you're going to get much out of the momentum. It's definitely worth testing these filters, but these are more for trending based strategies. What our pin bar reversal is exactly that. It's a reversal strategy. So this is a strategy you're running with your trend or your momentum or your Renko breakout or whatever it is, but you're definitely going to want to add. This is more an additional strategy rather than your primary strategy. So you've got your volume spike, volume divergence. That doesn't apply in the currencies, but obviously in the commodity markets, this would be something that would tie in nicely and potentially test up nicely with your commodities. Now you've got your double top, double bottom. That's just looking for price action to make a double top or double bottom. Very simple. You've got your MACD divergence filter. If you set that to 1, then that's going to look for divergences in price based on your MACD. So you can run your standard MACD, and you are selecting what type of MACD you're looking for. So it's up to you as the trader to say, right, well, I want it to run on the standard 1224 MACD, or I might want to have a slower MACD that I typically use, the 2452, or you can speed things up and do a 9, say 18. So it's up to you to decide that. You can look at your stochastic, your RSI, and add those filters to your strategy. But again, it's all about just doing some testing and making sure that you do your optimizations accordingly. Now we've got our standard time of the day and days of the week, so they're all fairly standard, that we know all about those. So, and your max session trades, win or loss. So when you're going through the strategy, one of the key things is once you've had a bit of a play with your entry and you're happy with your entry setup, that's important that you get an entry setup that you're looking for or you're looking to test. You might decide that, well, I want to test on the very, very tight pin bars, the pin bars that set up that have minimal body. They're the ones I'm looking for, and I want to specifically target the ones that set up near the key levels. So I might go into my strategy here, and I might go into paint bar, and it'll show me, and I'll add in, say for example, the key levels, and let me add that indicator in. And it should be, we've got our Asian range filter, that's great. And our key level, there it is there. Lucky it wasn't a snake, it would have bit me. Okay, so we have the key level now. You can see what's going to happen when you add the key level filter is that sometimes, depending on the market you're trading, you're going to get a significant look at how the market behaves around key levels. Other times, you're going to find that, well, not a lot happens around the key level. So if you are looking at a market like crude, for example, and it's glaringly obvious that every time there's a move around the key level, there's price reacts or responds, then you're going to want to add that into your testing. So this is a good visual cue to start off with, and then you can kind of base your testing off that. And you can see here that 76 has been pretty instrumental, hasn't it? Like, you've had some good movement off 76. We haven't had a nice pin bar. That was a mini nice pin bar, but didn't go anywhere. Kind of pushed through again. So there's our pin bar reversal, and that shoots up to a potential nice long trade. So you can see that once you start adding either the key levels or the weekly pivots, you're going to find that visually you're going to start seeing things that you potentially may not have noticed before. But it's a good way of mentally getting an idea of what you want to start testing on, because there's a lot of variables or a lot of options in your strategy. So you want to start getting a bit of a mental picture, even start taking some notes about how you want to kind of tackle your testing. What stops do you think are going to work well? What stops potentially aren't? But try not to bring a bias to the testing as well. Be a little bit systematic with it. So when you're going through and looking at your, testing your trailing stop, your moving average, don't automatically assume that you've got the perfect stop for this strategy locked in before you've even tested it, because that can definitely impede your ability to test other stops, because there's a lot of options. So it is a time thing. It's very time intensive. And what I would suggest, and I will make this available, or I will add this, I'll add the pin bar bulletin board so you can start sharing your strategies with other traders. I've added the Renko bulletin board, so I definitely would encourage you to drop your Renko charts onto there and start sharing those. And it's going to be really important for us to share either on the bulletin board or in Dropbox our pin bars, because the pin bar is going to be one of these strategies where there's a lot of inputs there of good strategy inputs. So that's what I'm really looking for. I'm looking for like across the platforms, and the same with the advantage is for us with I know I'm rambling on a little bit here, but the advantage for us for multi-charts is that it's a straight conversion. I can have this ready to go in multi-charts within a couple of hours, whereas MT4 is just a huge process to get it coded. So yeah, we will get there though. Any other questions, guys, for the pin bar?